All right, guys, welcome to another Forex analysis. And this is for Euro USD for the 29th day of July 2026. And before we go into the pair, do well to subscribe to this channel so that you can always get our daily analysis whenever we post it before the market open. Okay, and also this video is for educational purpose only. Now, if you have been following this page, you have been following this channel, we have been watching this pair, and I told us something when this market broke out from the structure. I think this was not there. I told us something that I won't be selling this pair because of the price and the price action I'm actually seeing. That was why I actually drew the structure that if the market broke through the structure and give some level of retracement before I can actually buy this pair. Okay, now the market break out and close inside, so it didn't actually close outside. So that tells you that that was a fake out. That was a fake out, and the market can decide to find support at this level and continue to the upside. Now, I promised that in the when I was doing analysis for NZD USD that I'm going to explain the another advantage of euro of waiting for retracement. Okay, so I will be explaining one advantage here. If you want to know the other advantage of waiting for candlestick retracement, and you should go and also watch that video on this channel, New Zealand USD, for this same day, 29th of July. You see another advantage. I want to explain one of the advantage here also why you should wait for retracement. As you can see, this candlestick broke out from this structure. Okay. Now, if you go to smaller time frame, let's go to 1 hour time frame. Now, the markets broke out from the structure, and as you can see, this was the break. This was the break. Now, there were traders that have already started selling at this level because of the break. But if you are a disciplined trader that always waits for retracement, you wouldn't have taken this trade. Okay, so that's one of the advantage. It's help you to filter wrong entry, wrong trade. You just filter it out. So when this market broke out from this structure, I didn't trade this because I have to wait for some level of retracement, which the market did, as you can see. So now, if I've entered this trade at this level, by now I would have been stopped out from the market. So now, what I should be waiting for the market to do, I should be waiting for some level of buyer's momentum for me to actually take this trade. Now, if I take this trade at this level now, this is the best place for my stop. If I take the trade at this level now, it is still better to trade at this current level than taking the trade at this level. If I enter this trade now, I won't be wrong. If I enter the trade now, because I won't be wrong. I can enter and even put my stop loss around this level. I do that sometimes. Just enter and put my stop loss very tight and just allow it to run. And sometimes the market will just move. And this is 1:10. This approximately 1:10. So if I take this trade and the market actually move to the downside without stopping me out, before the market gets to this place, I must have gotten up to 1:20, because at the break of structure, I enter another position. The break of structure retracement, I enter another position. I keep on entering till you get to this zone. I will explain all about that later on this channel, how you can maximize one movement to get a lot of pips. You just need one move to get 3 times that uh, uh, targeted area or that targeted pip. Okay, so now I will be taking this trade. Okay, let me check it. Let me go to 15 minutes and see. Okay, so this trade is cooking up. This trade is cooking up, it's cooking up. So once the market open, I believe this is a good setup playing out, but I don't really like the candlestick are just too the volume is very, very poor. The volume is poor, but that does not mean that this is not tradable. It is actually tradable. Okay. And for scalpers, this is also a good scalping structure, but I won't advise for you to start scalping now. Just wait when the market open fully. Okay, now what are we trying to say? What we're trying to say is that you can actually take this trade at this level if you want, okay? But if you want to be more safe, wait for the market to get back to this level, But by then you might be entering late. You might be entering the market late if you wait for the market to get back to this level. So what am I trying to say? What am I saying in essence? Okay, now we have waited for the break of structure. Now we have waited for retracement. Now the market is ready to be we are ready to join the market, but we just need to wait for volume. Let's wait for volume to be in the market. When I mean volume, volume of buyers, yeah, of sellers, sorry. Let's wait for volumes of sellers. If you see volumes, once the market open in the next few minutes now, once it opens and you see volume in the market, you can actually trigger a trade, but make sure that you risk at least 1%, at most 2% of your account. Don't risk more than that so that you can enter other trade in case if this trade goes against you. All right, that's that for Euro USD. Note that this video is for educational purpose only. Always do your own analysis and let's see what we can get out of the market. All right, see you in the next pair. Bye.